Let's get to Kevin Green to sort of break down the action as far as the setup as we head into this FOMC decision. Good morning to you, KG. Thanks so much for joining me. I'm just wondering, what are your expectations? What are you seeing there as far as volatility heading into the Fed decision?
Yeah, I would not be surprised if we actually do trade within, let's say, a 15-point range going into the statement at 2 p.m. Eastern time. And that's usually something that we do see on a day like today. We will be focusing, obviously, on the Fed statement. There's summary of economic projections, the commentary coming from Powell, and we do have some earnings coming up over the next day or two that could also, shake markets. Now, when Thursday of last week, we were kind of talking about volatility was actually relatively low, given the fact that we do have event risk this week. Now we are starting to see volatility actually ramping up here a tad bit. Hedging activity, especially to the downside for the S&P 500, has been taking place over the last 24, 48 hours. And now we are starting to see that volatility kind of creep into the market when you're looking at the VIX. But what could actually happen right now, the market is obviously pricing in the fact that we might have a hawkish cut. And if we are actually going to get exactly what the Fed does provide is a hawkish cut, and we do not have any other surprises, that could actually crush volatility, and that could actually move us a little bit higher. These Fed meetings, usually once you get the statement, we see a significant reaction to the upside and downside. Liquidity comes out of the market, and then once we have Powell's statement and he takes a couple of questions, we start seeing liquidity coming back into the market and choosing a direction to the upside or downside. I think that's going to be the same case today. You are also seeing a broadening out of this market as well. It's not information technology leading the way today. In fact, that's a negative sector, but you are seeing expansion of breadth with around 60% of the stocks in the S&P 500 in the green. So we're setting up normally in a normal fashion like we would see any other Fed meeting here, and I would just say that we probably will consolidate here until we actually get that statement at 2 p.m.
Okay, things looking a little bit calmer, a bit directionless as we head towards that decision come 2 p.m. Eastern. Let's just switch gears and look across the commodity space. No shortage of stories there. I've seen that the White House has sort of been coming out and talking about some of the discrepancies around soybean purchases coming from China as far as that timeline is concerned. Can you sort of just talk us through what you're seeing there, the significance and the price action this morning?
Yeah, we are seeing a little bit of gyration when it comes to the soybean markets, at least for this morning, but it has pulled back from the highs over the last couple of days here, and we have not gotten a lot of flash sale announcements regarding soybeans lately, and we are starting to see that maybe China will not actually meet that year-end target that everybody was assuming that was going to take place, 12 million metric tons of soybeans being sold to China here. It's a very tall order. We knew that going into this, and now it seems the White House is starting to pivot here a tad bit. We actually had Scott Besson make some comments yesterday saying that they're going to make the purchases and the commitments by the end of the growing season for soybeans. And then we also have Jamieson Greer, the U.S. Trade Representative, kind of following up on those comments as well, stating that they're going to purchase these soybeans by the end of the growing season. What's interesting, though, Sam, is the growing season actually ended in November. So if you're harvesting soybeans right now, you're doing so in a significant amount of snow in some parts of the Midwest here. So the market is a little bit confused around the commentary. Obviously, they're backing this off. China has made commitments, though, so we have to be mindful of that. Technically speaking, we still have a gap to the downside that we could actually test around this $10.75 level, or $10.75 if you're a grain trader here, where we could actually see a pullback to the downside, and then even looking at that $10.45 area as a major area of support. So lackluster commentary coming from the USDA on these purchases. Once again, confusion when it comes to the White House, but China is making steps. It's not like they're not purchasing, but the end of the growing season for soybeans, Sam, the big thing is that's in November, so it's already passed, so it doesn't really align with the White House statement.
Yeah, it's interesting, isn't it? Certainly a little bit of confusion in the market this morning, shifting goalposts. It's interesting, obviously the US managing to sort of extend this timeline as well for China to make these purchases as well. I mean, you've had the news around the H200 chips this week too. You just wonder how much China is doing, as part of the concessions and as part of the trade deal as well. I mean, I know they're holding off on some of the rare earth export controls, but, certainly an interesting dynamic as far as this trade tension is concerned. Let's just stick with the commodities theme. Look, silver continues to catch a bid. I mean, we're extending gains today. Gold is under a little bit of pressure today. But, talk us through spot silver right now. I mean, we hit an all-time high earlier. But, obviously we managed to hold on to some of these gains right now. What's driving that?
Yeah, well, you still have the fundamental backdrop of silver. It's in a structural deficit. It has been in a structural deficit for at least the last 5 years or so, especially when you start adding in the ETF holdings and ETFs like SLV and things of that nature. And so buyers continue to step in. I think this is more of a risk-on tone in the market, but it also signifies that the market might be pricing in higher inflation and higher yields moving forward as well. That's usually what you see in a correlation between gold, silver, and yields. And so this is not really a speculative trade, and I saw a post about this the other day. It's not really a speculative trade that the Fed's going to cut rates. It's really focusing on economic growth and expansion, because silver is an industrial metal before a precious metal, and it has been moving to the upside. Also, retail buyers stepping into SLV. SLV is actually covering their positions with physical silver bullion. So if the physical market is still seeing a short covering type of an event, that could push prices higher. Today's candle, keep your eye out on it though. I mean, right now it's looking like a shooting star candle. You are seeing RSI making a lower high, so we are starting to see a bearish divergence in some of the momentum indicators, but it's hard to fade this particular trade right now. But if you're new to silver, and I always have to put this out there, if you're new to silver, be careful, because it's a very volatile metal, a lot more volatile than gold, and so this thing can move aggressively higher fairly quickly, as well as re-rate lower fairly quickly.
Okay, and just shifting to Dr. Copper, I mean, you've got this obviously managing to catch a bid as well. We have also seen these nice highs as well as far as prices are concerned. I've seen that Morgan Stanley is expecting this to continue as far as the price forecast into 2026. You've got obviously the demand story. Just talk us through sort of the price action right now for copper.
Yeah, you are seeing it trying to make new highs. The next area of resistance around $5.80. So this is another situation where there will be a supply deficit and some issues when it comes to mining copper ore in 2026. That's pretty much known now after we've seen a lot of the earnings announcements over the last month and a half from these copper miners. And so you are seeing some buyers really stepping in, maybe also some optimism when it comes to China. They had some inflationary data yesterday. If you look at the CPI, it still came in lower than the street's expectations. But if you're looking at the year-over-year print, it's getting closer and closer to where a lot of economists really want to see China moving to the upside when it comes to inflation, and that could also be a tailwind when it comes to copper. And then we have the AI story taking place as well. So this continues to move higher. Also, just kind of note, the London Metals Exchange, or the LME, is really what's being quoted on an international basis when it comes to copper. So every day you're probably hearing that copper's trading at all-time highs. That's in the London Metals Exchange, not here at the COMEX. And what you probably will see if copper is going to top is a shorting of the London Metals Exchange copper and the buying of COMEX and lowering that spread here. So maybe another move to the upside here for copper over the next couple of weeks.
Okay, moving to the upside to the tune of 0.7% right now for copper. Silver just dipped, but we are keeping an eye certainly across the commodity space. Thanks so much for that, KG. I'll check in with you a little bit later.